The listed property sector hopes its recent turnaround is here to stay. Developers Mirvac and GPT both turned billion-dollar losses from the global financial crisis into healthy profits this year. Andrew Robertson reports.
Cheap, easy credit fuelling the prospect of turbocharged unproperty-like profits were an explosive mix for listed property, and the sector paid a heavy price when the global financial crisis took hold in 2008. Most, though, are emerging from the GFC wreckage in good shape, with GPT and Mirvac two prime examples.
They've lowered their debt levels, which were extremely high, and by focusing on the basics, as it were, they've been able to provide stability, which is what I think the investor needs to see after the turmoil that we've seen in the sector.
Mirvac was a sea of red ink last year as write-downs plunged it to $1 billion loss. A restructuring and refocusing of the company on its core businesses turned that around to a $237 million profit for 2010. Mirvac will pay a final distribution of 2 cents a security, giving a full-year payout of 8 cents. Mirvac Chief Executive Nick Collishaw says it was a year of going back to what the company does best.
A core skill set around the development of preeminent apartment buildings, community building in a land and housing area, and really in the core of investment management.
On that score, Mirvac acquired $2 billion worth of assets with the purchase of the Mirvac Real Estate Investment Trust and the Westpac Office Trust, a move which shores up its rental income. GPT's half-year result mirrored Mirvac in that its back-to-basic restructuring has also paid dividends. However, Chief Executive Michael Cameron says getting the company back on track and focusing just on Australia has not been easy.
Dealing with some of the Babcock and Brown joint venture issues were extraordinarily complex. The decision to exit those relationships was straightforward, but actually executing the strategy was quite difficult.
GPT's half-year profit of $145 million follows a $1.2 billion loss for the same period last year. It will pay a distribution of 7.6 cents a security, well down on last year. Lincoln Indicators' Elio D'Amato says the result is a victory for debt reduction.
The main contributor to their profit figure today was a lower interest charge. That on the back of a reduced debt balance, as well as the fact that their credit rating had improved, which meant that they were able to access debt at a cheaper price.
GPT's Michael Cameron lifted his profit guidance for the full year, and investors lifted his security price by 4%. Mirvac's Nick Collishaw was more cautious, though, about the outlook, and Mirvac securities closed unchanged.